Hi, thanks for spending a moment with me again on the video version of the Norm and Goldman Show. Now, I have found people approach insurance in a very interesting way. They have a combination of fear and boredom. There are different kinds of auto insurance. I'm not talking different companies now. What most, if not all, of the states require by now is called liability insurance. It's sometimes called public liability insurance. That's the only kind of insurance that's required by law. Liability insurance comes generally in minimum limits of like $15,000, $30,000. That's set by state law. It doesn't cover a lot, but it is generally pretty affordable. That's what the police want to see if you get pulled over. That's what the state wants to see, some states, when they renew your driver's license or renew your car registration. Now, liability insurance never pays you a nickel. It pays somebody else if you are at fault in an accident. And when you see those numbers, 15/30/5 or 10/20/30, let's take 15/30/5, which is very common in minimal limits liability insurance. The 15 means your insurance company will pay somebody else on your behalf to get you out of a lawsuit, to get you out of trouble, to get you out of a liability claim. Your insurance company will pay $15,000, up to $15,000 per person, with a maximum of $30,000 for everybody that you injure in the car accident. And that last number, if it's 15/30/5, the $5,000 on the end is for property damage. So if you run a red light and you broadside a car with two people in it and you destroy their car, your insurance company will pay on your behalf to get you out of trouble. $15,000 up to $15,000 per person for each of those two people for a maximum of $30,000, and $5,000 to fix or replace their car. Now, if you do damage more than the 15, 30, and 5, theoretically the other side can sue you for the excess damage. The problem with that is many people are what we call judgment proof, meaning they cannot afford to pay anything more. A lot of people just accept what the insurance company will offer, especially if the people are poor and all there is the insurance. So try and get higher limits. It will cost more money, but if you've got assets to protect, if you've got a house, if you've got a fancy car, if you've got stocks and bonds, if you're well enough off to have that kind of stuff, you want more insurance protection because you don't want somebody doing an investigation and finding out that you've got a lot more money than your minimum insurance limits and telling the insurance company, your insurance company, screw that. We don't care about this person's insurance. We're going after their home and their car and their stocks and bonds. Now, if you finance your vehicle, the bank or the finance company is going to demand what's called comprehensive and collision. Sometimes it's called physical damage insurance. That fixes or replaces your car, no matter who is at fault in an accident, even if you're drunk and you run your own car into a tree. Comprehensive and collision, the reason they call it comprehensive is because if a tree falls on your car while you're sleeping in bed at night and there's a storm and a tree falls over and trashes your car, your comprehensive and collision coverage pays for that. If someone steals your car, that's what comp and collision pays for. If somebody sets fire to your car, or if your car is damaged in an accident, comprehensive and collision is there to cover your vehicle no matter who's at fault. The law does not require this. And if you have an inexpensive car or an older car that's not worth very much, then it's really not worth having comprehensive and collision because typically there are deductibles and it's expensive coverage for a car that's really not worth fixing or repairing. Only if you have a car with some real value to it should you consider comprehensive and collision. There's another type of coverage called medical payments, and that's what it sounds like. If you're injured in an accident, again, regardless of who's at fault, your insurance company will pay your medical bills. Now, if you have medical insurance, your own medical insurance, aside from this, your car insurance company pays first. And it's commonly called MedPay, but if you have medical payments insurance, it covers not just you, but everyone in your car. And by the way, another note on liability insurance, if you run a red light and you've got passengers in your car and you harm people in another car and people in your car, your insurance covers everybody in your car too. Liability insurance covers everyone you harm, whether they're in your car, a pedestrian, whether they're in somebody else's car, if you knock over a city street light, if you knock over a city street lamp, if you knock over a fire hydrant and water starts gushing everywhere. The property damage coverage under your liability, that 5 of 15, 30, and 5, pays for all of that, which is why it's always good to have higher limits if you have assets to protect. Because if you have 2 passengers in your car and you run a red light and you hurt 3 people in another car, that 15 and 30 is not going very far, right? If you hurt 2 people in your car and 3 people in the other car, you've hurt 5 people, and the maximum your insurance company is obligated to pay is $30,000. So that's not a lot of money to spread around, especially if you do some real damage. Aside from comprehensive and collision and liability insurance, there's MedPay. There's also rental and towing, which covers what it covers, right? If your car is damaged in an accident and it's undrivable, your insurance company will pay. Typically, it's like $30 a day for up to 30 days while your car is being fixed. You decide for yourself whether it's worth it. It's typically not very expensive insurance, and it can come in handy. Now, most rental cars are more than $30 a day, but very often your insurance company has a deal with a local rent-a-car agency where they'll rent you a basic and expensive car for, what the insurance company is willing to pay. There's another thing I want to spend a second on. It's called umbrella coverage. It's kind of fancy. What it means is if you've got homeowners insurance and car insurance, you can get both of them for limits of, say, 100 and 300, meaning 100,000 per person, 300 for everyone in the accident. And if you have homeowners insurance, you can get what's called an umbrella policy, meaning it'll pick up from where your insurance leaves off. So if you have an auto insurance policy, say with State Farm, just for the sake of it, and you have homeowners insurance with State Farm, and you have an umbrella policy, your car insurance would be 100, 300, your homeowners insurance would be of similar limits, and then the umbrella is one extra policy that would start where the other 2 leave off and typically goes up to about $1 million. That's in case you do some real damage, and that's for people who have significant assets that they want to protect. The benefit of having an umbrella policy is that second policy, the umbrella that lays on top of the 2, is typically pretty cheap because the odds of you needing it are not very great. So you're not probably going to need it. The insurance company doesn't charge much for the umbrella, but if you have some, real assets to protect, you may want to hike up those limits. Now, if you want more details on this, I've got a whole series on car insurance on my Beyond the Norm subscription at normandgoldman.com. It's $5 a month. Thanks for being with me. We'll see you next time on the video version of the Norm and Goldman Show.